So, cannabis stocks are soaring after news came out saying that Trump might reclassify cannabis. And as you know, I'm long in the sector. I bought Trulieve, ticker TCNNF, at $4.80 back in January. And well, as the stock is currently trading at $8, that means I'm about 70% positive, which makes me quite happy, right? That's great news. However, as we'll see today, I think that's just the beginning and that this stock, Trulieve, could go much higher. So, in this video, we'll do an update on this investment thesis, okay? Covering how Trulieve has been progressing. We'll also talk about valuation. And in the end, I will also answer a question one of you guys asked me about where I'm planning to sell the stock, at which price. And with that said, let's dive into the first part of this video. So let's come here to Seeking Alpha. Let's go to Financials. And here, let's select the quarterly results, okay? The quarterly numbers. So here they are. Now regarding revenue, as we see here, Trulieve delivered $302 million in revenue in the last quarter, which when compared to 1 year ago, represents a slight decrease, right? Of how much? Of 0.45%. Now, why did that happen? Well, we can find the answer here in their earnings call transcript. So as we read here, retail traffic and units sold increased by 8% and 9% year over year, offset by pricing compression and loyalty point redemption. Now, what does that mean, right? Well, that means that the company is selling more products to more customers, which is a positive sign. However, that also means that the price of cannabis is going down, which is bad news. On the other hand, let's not be surprised by that, you know? I mean, we should expect the price of cannabis to drop. We should have that under our radar, you know? After all, we are dealing here with a commodity. So, as more people, as more companies produce and sell cannabis, its price will likely go down. And regarding the loyalty points redemption issue, that means that many people are using loyalty points instead of cash to buy their cannabis products, which is also pushing Trulieve's revenue down, obviously. So that's why revenue went slightly down, because of these two factors. Now the question is, if Trulieve's revenue might continue dropping, why am I still holding this stock after all? Because even though I think the price of cannabis will decrease over time, I also believe that the number of people using cannabis will increase and that Trulieve will be able to sell its products to more and more customers. So overall, I believe that in the long run, Trulieve's revenue will continue growing. And even if it doesn't grow, this company is trading at such low valuation levels, as we'll soon see, that even without any growth, I still believe this stock might go up. Now regarding gross margin, as we see here, the company has been making solid progress, with its margin going from 53.6% in December 2023 to the current 60.5%. That's a huge improvement. In fact, last December, Trulieve's gross margin reached 62.1%. That's the kind of margin you see in a tech company. So yeah, revenue might be pretty much in the same place, right? However, gross margin is expanding, even with pricing pressures, okay? And Trulieve's overall results, as you will see, are getting increasingly better. Now, talking about operating income, about operating margin, as we see here, the company has been delivering increasingly better numbers, right? And has now reached an operating margin of 17.3%, which is simply excellent. On the other hand, even though Trulieve has been delivering excellent operating results, we are still seeing net losses. And the reason for that is that all the company's operating profit is being eaten up, first by interest expenses, here, which came in at $16.4 million in the last quarter, which is pretty much in line with previous quarters, right? And second, by tax expense, which totaled $54.7 million, which is absurd. I mean, the company's paying more in income tax than it makes in operating profit, which came in at $52.4 million. And we will talk about why that's happening in just a moment, but that's a crucial point. But basically, that's why Trulieve is still unprofitable, mainly because of extremely high income taxes. However, it seems that Trulieve is getting closer to break-even. As we see here, in the last quarter, Trulieve's net loss stood at only $13.8 million. which represents a net margin of how much? Of 4.56%, or 4.5%, right? Let's make things easier. Now, of course, that's still a loss, right? However, it was much better than what we've seen in the previous quarters, right? So what it seems to me is that the company is indeed approaching break-even, and I wouldn't be surprised if Trulieve started posting net profits, even with those huge taxes. Now, why is Trulieve paying such high taxes? Because since Trulieve is a cannabis company and cannabis is classified as a Schedule I drug, it is subject to Section 280E, which prevents companies in the sector from deducting almost all of their operating expenses for tax purposes. So Trulieve and cannabis companies in general basically pay taxes on their gross profit, which is absurd. However, this will change with cannabis reclassification, and these companies' numbers will likely improve massively because they won't be paying such abusive taxes anymore. That's why, going back to revenue and the pricing pressure on cannabis, but that's why I'm also not so worried about these things. Sure, the price of cannabis might go down, and revenues might suffer a bit with that, right? But on the other hand, considering rescheduling, there's still a lot of room for improvement. And these companies' valuations, as I said, are already reflecting very pessimistic premises, very pessimistic assumptions. They are already at very low levels. In other words, these companies' valuations seem to be already pricing in a horrible scenario. So considering rescheduling, again, I believe the actual numbers might come out much better than what's currently being priced in, so that's why I feel comfortable holding Trulieve, even with the pricing pressure issue. But cannabis rescheduling, cannabis reclassification matters for other reasons as well. For instance, the reclassification of cannabis will also make it easier and more likely for cannabis to be legalized at the federal level, which would also have massive effects on these companies' operations. For example, these companies will gain access to the banking system, which they currently don't have. Besides, cannabis companies will also be able to operate across state lines, making their operations much more efficient. Because think about it, right now, in the current state of things, if you were a cannabis company, you can't grow in California, for example, and sell your product in New York, because you cannot operate across state lines. That's forbidden. So if you want to sell your product in New York, that means you need to grow your product in New York. The problem is that California is a much better place to grow cannabis than New York, right? So that's why rescheduling and federal legalization are going to be so important for the sector. So keep in mind that these companies' numbers could improve massively, okay? Always keep that in mind. So even though Trulieve's numbers are already good, with rescheduling and federal legalization, they could get much better. Now let's talk about cash flow. But before we dive into that, if you are enjoying this video, don't forget to leave your like, okay? And I also invite you to subscribe. So last quarter, Trulieve delivered a lot of operating cash flow, as we see here, $86.1 million, which is much more than in any quarter since March 2024. Now, considering that the company delivered $300 million in revenue this quarter, these $86.1 million here represent an operating cash flow margin of 28%, which is excellent. And well, since Trulieve only spent about $11 million on capex, this means it delivered around $75 million in free cash flow, which is wonderful. Now, if we annualize that, we get $300 million in free cash flow, right? After all, 75 times 4 equals 300. So if Trulieve's market cap stands at around 1.4 billion, as we see here, and if the company holds how much? And if the company holds around 430 million in net debt, that means that its enterprise value stands at 1.8 billion, more or less. So with that in mind, at what multiple is this company trading at? At what enterprise value to free cash flow ratio? Well, to answer that, it only takes some simple math. So 1.8 billion divided by 300 equals equals 6. So Trulieve is trading at an enterprise value to free cash flow ratio of only 6 times, which in my opinion is a ridiculously low multiple. For example, I can easily see Trulieve trading at 20 times enterprise value to free cash flow. That's why I said in the beginning of this video that this stock could go much higher, because there's simply a lot of room for multiple expansion here. Now, before we continue with this company's analysis, if you enjoy analyzing stocks, I'm leaving a link to this platform I use, which is called Seeking Alpha, with a discount coupon, okay, in this video's description. Now, let's quickly talk about Trulieve's balance sheet. So, as we can see here, total cash and short-term investments went up and now stand at $392 million, while the company holds only, how much? $124 million in total current liabilities. So we have here a quite good scenario. The company is generating a lot of cash and is also well capitalized, with no problems in the short-term future. Now, in terms of long-term liabilities, what stands out to me here are these $476 million in long-term debt and these $320 million in capital leases, totaling around $800 million, which is actually what Seeking Alpha shows as total debt. Seeking Alpha is showing here that Trulieve's total debt stands at around $830 million, $825.5 million. Now, $825 million in total debt. Is this a problem or not? Well, I don't think so, because considering the cash and short-term investments the company holds, this debt here falls to $432 million. That's Trulieve's net debt, as we see here. So if the company is generating around $300 million in annualized free cash flow, instead, let's say $200 million, okay, to be more conservative. So if the company is generating around $200 million in annualized free cash flow, that means that Trulieve would be able to pay down this debt in a little more than 2 years, which doesn't sound like a huge problem to me. So generally, it seems to me that Trulieve's liabilities are pretty well under control. Now, just to summarize what we've seen about Trulieve, so revenue has stalled, right? But the operation as a whole continues to get better, margins are solid, the company is also delivering a lot of cash generation, its liabilities seem to be under control, and if rescheduling actually ends up happening, all of this could even get better. So, I pretty much like what I see here. Now, to close this video, let's talk about valuation again and answer a question you guys asked me about at what price I would sell this stock today. So this is how I think about it. First consideration, my plan with Trulieve is to hold this position while the cannabis market develops, okay? So, my initial plan is to hold this stock for years if needed. With that said, if this stock reached an extreme price today, if Trulieve started to trade at very high multiples, then I would indeed consider selling it. So the question now is, what price would that be? What would I consider an extreme price? So let's answer that in a simple way, okay? So what would I consider a very high price to sales multiple for Trulieve? Well, if Trulieve started trading at 10 times revenue, for example, then I wouldn't have any doubts that it is expensive. It certainly wouldn't be cheap, right? So with that in mind, I simply prefer to put a multiple of 10 times on top of Trulieve's current annual revenue, which, as you can see here, stands at around 1.2 billion. So 1.2 times 10 equals 12 billion, right? So if Trulieve reached that market cap of $12 billion, then I think I wouldn't have any doubts about selling it. Oh, but a market cap of $12 billion is too much for Trulieve. I know that many people might think this way, but you see, Trulieve has already reached a market cap of $6.5 billion in 2021, as we can see here, when its revenue stood at, let's see, at 930 million. So, 6.5 divided by 930. So back then, in 2021, Trulieve was trading at 7 times revenue. So yeah, a multiple of 10 times revenue might be too high for Trulieve. I agree on that. However, let's not forget that this company has already traded at 7 times revenue back in 2021. Oh, but in 2021 the situation was different, the macro environment was different, interest rates were near zero, the market was completely hyped. Yeah, but the market can get completely hyped again. For example, what do you think will happen if cannabis gets rescheduled, if cannabis gets legalized in the federal level? If that happened, these cannabis companies could start trading at much higher multiples, man. For example, they could indeed trade at, let's say, 15 times revenue. That would be a possibility. If cannabis got rescheduled, I think that everybody would want to buy these stocks, and that everybody would buy these stocks, no matter the valuation. So then we could see these stocks trading at extreme valuations. Really. So that's it. That's what it would take for me to seriously start considering selling my Trulieve shares. An extreme multiple like 10 times revenue, or at least 7 times revenue. Yeah, that's too high. I know that's too high. But that's it. I want to sell my companies, I want to sell my stocks at high prices. Otherwise, I just prefer to continue holding them. So that's my answer. That's when I would seriously start to consider selling my Trulieve shares. If this company started trading at a very high price, right? At a very high multiple, like 7, like 10 times revenue, right? Now, I don't know what price that would be. Today, I haven't done the math. And honestly, I don't want to do the math right now, right? But you are free to do it. However, I think that would be around its all-time highs. That would be my guess. Anyway, I don't think I have anything more to cover today. Wait a minute, not so fast. I have a small correction to make here. You see, Trulieve has already traded at more than 10 times revenue. As we can see here, in March 2021, Trulieve reached a multiple of 11.5 times revenue. So no, it certainly wouldn't be unimaginable, it certainly wouldn't be out of this world to see Trulieve trading at 10 times revenue, okay? So that was the correction I wanted to make. And now we can finish this video. And with that said, bye-bye.